There are a lot of misconceptions. There's always misconceptions with health insurance, but I think the things I've been battling this year have been the tax credits, right? That was in the news. That was why the government was shut down. There's still a few people coming to me like, why are the tax credits gone? I'm like, guys, you must not have watched the news. Maybe people are intentionally avoiding the news, I think. But I have a client that lives in like a off the grid and they even knew. So the tax credits, this is what I heard a lot this year. Well, the tax credits are all going away, so I'm not going to get any financial help. That's not necessarily true. Other things, well, I heard my plan is going to double in cost. I had a client come to me, I thought my plan was going to be $1,000, and it turned out he had like a $100 plan. So not going to necessarily double or triple in cost. Other thing I'm battling is people just with the uncertainty in the government and things like that, they just feel like the tax credits might just go away in the middle of the year, or their insurance costs might just go up in the middle of the year. These prices are set by the government and the Department of Insurance, and they are approved and they are set to stay. If you're on the marketplace on Medicare, depending on your plan, but the reasons why your price would increase is if your income increased, right? And you needed to update your income. It's not, the tax credits are not going away mid-year. Private plans. All the time people come to me, well, I want to get a private plan. Maybe if you're on Medicare, you can call some of those private plans, like a Medicare supplement would be a private plan. But for my under 65 crowd, I think there's varying definitions of what is a private plan. There's not really exactly a private plan. I'm going to touch on that a little bit more. Catastrophic plans. It depends on your definition, but those aren't exactly available by like the federal definition either. So you can buy emergency-only health insurance. Maybe. You can kind of buy a supplemental, but it is not major medical. Major medical does not exist in the form of emergency room only. It's going to cover like preventive care, routine care, emergency care, all of the above. You're not going to just purchase like a plan that if you go to the ER, right? I can't afford health insurance. I hear that all the time. Maybe it's true this year, but maybe you're not looking in the right places. Maybe you don't understand I'm healthy, I don't need insurance. Everybody needs insurance, right? We insure our cars, we insure our houses, and obviously there are enrollment periods, so you cannot just get insurance at any time. If you could get insurance at any time, then you'd only get it when you were sick and prices would be through the roof, right? That's why there are enrollment periods. And we'll touch on cash pay rate versus insurance. There can be pros and cons to both, but insurance is for the big things, right? Just like if your house floods, that's what your homeowner's insurance is for. So the big question, why did premiums increase? This is a little bit about the rates in North Carolina specifically. So, there is a range of increase from like 17% or so to 36%. That's kind of the range of increase. The average increase is 28%. So a lot of people saying, oh, it doubled, it tripled. It may have for that person, but that could also be factors based on their income and things like that too. There's a lot of factors in determining your healthcare costs. So that's a range of a snapshot in North Carolina of the carriers. The biggest reason premiums increase this year is the loss of the enhanced subsidies, the enhanced tax credits people receive for their premiums. That is not tax credits entirely, it is the enhanced tax credits. I'm going to touch on that. What's also going on, healthcare costs are just really high. The insurance have to pay that. The insurance companies have to pay that. Medicaid benefits are being rolled back. That is something that the hospitals, survive on Medicaid, Medicare, Marketplace. So with those benefits being rolled back, healthcare costs are going up. Medical loss ratio, that's something I'm going to touch on. The other big reason things increased is this is directly because of the loss of the enhanced subsidies. So when prices go up, then healthier people drop off because they say, well, I'm in a cash pay. I don't need health insurance. When those people drop off, they were paying their premiums in paying into the system, right? The healthy people. Well, when the health people drop off, you're left with sick people and higher users of health care. And then due to medical loss ratio, the insurance companies have to pay for the sicker people, the higher users of health care. And so rates go up for everybody. The system works well because we don't have universal health care. The system works when the healthy people are paying in and helping the sick people, right? So that keeps the cost down when everyone is utilizing insurance. So to deal with the tax credits, the Inflation Reduction Act of 2022 extended subsidies. So the enhanced subsidies are meaning that everyone got more financial help because of our friend COVID. So that was part of a COVID relief package. So that meant higher income families and individuals got more help, lower income people got more help, middle class, everybody got more help. But financially, like people that were higher income were getting help due to this act. That now that those enhanced subsidies have gone away, then there's a subsidy cliff. It used to like taper off where higher income people would get some financial help. Now there's very much a cliff where higher income people are just getting zero. So they might have gotten $500 or $600 or $1,000 a month to help, and now they're getting zero. So a lot of this really affected like higher income people, but everyone saw their premiums increase because they're getting less financial help in general. So that was the reason why Congress or the government was shut down. Congress opted not to extend those subsidies. So they expired on December 31st and they are not available for 2026. So that means tax credits didn't go away for everyone, but it did go away for some people, and the amount of financial help people are getting on the marketplace is just less in general. Does anybody have any questions about that? So that's what I kind of had to fight a lot, was people saying they were hearing in the news that tax credits are going away. They weren't going away entirely, but they are going away for a number of folks, and they are less, and it did drive the prices up because healthier people and those folks that were higher income dropped off. So basically that's what happened with the tax credits. There are a lot of people still getting financial help, a lot of financial help. So it is a misconception that people aren't getting tax credits. Medical loss ratio. This is a very industry term, but it's super important to understand because I constantly am hearing about, the greed of insurance companies, the greed of, the industry. So by law, the insurers have to spend 80% of your premium dollars on healthcare costs. For employers, it's 85%. So the money you're paying in, the majority of it is going towards healthcare costs. That leaves 20% for paying me. I wish it was 20%. Paying me and administration and marketing and all the other overhead and stuff like that. So the cost that you're paying is going directly into your healthcare and quality improvements versus administrative costs and paying CEOs and stuff. Sure, CEOs always make a lot of money, right? But that's like CEO of Target, CEO of whatever company. They're the big dogs. But that's mandated by the Affordable Care Act that they have to use that certain amount of dollars. So if they fail to meet these standards, they actually have to issue a cash money rebate to their insurers. So this protects people from, insurance costs just being solely profit, right? Does that make sense with the medical loss ratio? I don't think a lot of people really understand that. And so they're like, well, why did premiums go up? Because they legally have to spend that much money, and with healthcare costs being high and sicker people, they're gonna have to spend more money. This is the big thing, changes to the ACA. There were a lot of changes that were supposed to go into place. Some were blocked by federal courts. Some were put towards future years. So there will be some more changes that happen in 2027, maybe even future years. But for this year, some of the big things. Tax credit repayment limits were eliminated. So it is very important for people to understand their income, because there used to be repayment limits where You might only have to pay back a certain amount of tax credits at the end of the year, but those were eliminated, so people will be paying back the entire amount that they owe at tax time based on their estimated income on the marketplace and how many tax credits they were receiving versus what they should have gotten. Another thing that is no longer available, used to be low-income individuals could enroll any time of the year. That's not going to be possible. That's not a special enrollment period anymore. True catastrophic plans were available to certain individuals that maybe had certain circumstances, but those are not available everywhere. So a lot of people signed up for these catastrophic plans and they're not available in North Carolina. The insurers don't offer them. So if people are asking about catastrophic plans, they don't really exist. A really helpful thing, I think, maybe for the folks that are trying to get their income down, all high deductible bronze plans are now HSA eligible. It used to be certain plans. Now all plans are HSA eligible bronze plans. So you can set up a health savings account. Maybe helpful information for your clients, right? DACA recipients can't sign up for marketplace coverage anymore, and certain lawfully present immigrants aren't going to be able to sign up for tax credits anymore. Those are just a few of the changes. HSAs, health savings account, as I mentioned, anyone in a high deductible bronze plan can set up an HSA. Employers are offering HSAs. That's a good opportunity for people to set aside money on a pre-tax basis. That helps pay for certain qualified medical purchases, whether it's co-pays or maybe to meet your deductible, certain things like prescriptions. They have triple tax advantages. They're tax deductible as a business expense, tax-free distributions on eligible expenses. A lot of people ask how you set it up, literally through a bank. So it's not set up through the insurance company, your bank, or a bank that offers that. We still have a little bit of time with open enrollment. There is still time to make plan changes. Some of the ways to come up with more affordable options, maybe changing from a silver plan to a bronze plan, changing from an HMO network or a PPO network to an HMO network, ways to get those costs down. Maybe change insurance companies entirely. Maybe there's a more affordable carrier. Explore alternatives, which I'm going to talk about, but those are minimal. Medicaid eligibility for lower income folks that maybe were borderline, maybe that's the way to go, is maybe Medicaid works best for them and they are eligible or could be eligible for a certain amount of time. Employer coverage may be more affordable this year. In the past, it was always like marketplace tended to be a lot more affordable, but that may not be the case this year. My hopes are that things are going to straighten out a little bit next year when the insurance companies understand their medical loss ratio, right? But that's just my prediction. I don't know for sure, but it was such a tumultuous year and so many things were changing all at once that I think the insurance companies, no one really knew how to react, and they just knew that they probably had to prepare for higher costs to meet that medical loss ratio. So how to shop smarter? For individuals and families, make sure your income is updated. Do the math. Make sure that you are getting the right amount of tax credits based on your household income. You want to check that your providers are in network always, because that can change every year. Compare, this is what a lot of people don't do. They look at just the premium costs only. Well, this is a monthly bill, right? But they don't look at how are they using their health insurance? What are their estimated costs of how they're utilizing their health insurance, the co-pays and things they're expecting, not just the overall premium costs, right? You kind of have to do the math and see what makes sense each month. I help people with that a lot. And drug formularies change, like the drugs that are offered and covered on the plan, so you want to review that every year. As a business owner, especially a small business owner, you really want to separate what you're doing personally from what your employee coverage decisions are. If you're using a broker and agent, ask for them to really go over these plans. It can be confusing, right? Understand the terminology and what your plan looks like and what you're offering to your employees. And this guy, I think, goes across the board. Don't assume that your same plan fits your needs next year. I think a lot of employers do that because it's a lot of work to change plans. But if it can save you money in the long term, it does really make sense to like sit down and look at it. And then know your deadlines. That's important for everybody. The old, I'll just pay cash. I don't need insurance. That might be fine for like routine care, day-to-day things. Maybe you have a direct primary care doctor where you pay a membership and you can go to your doctor as often as you want. I have that, love it. But are you prepared for those major costs? So with health insurance, even if you are doing routine care and things like that, they are negotiating the costs with the providers, right? They're negotiating the rate even if you're not met your deductible yet. You're having those set costs that you know, like co-pays and deductibles. Those are set costs, you know. You can budget appropriately. You have an out-of-pocket max. What that means is that's the most you pay for a plan in a plan year for any like covered services, right? It might be a $10,000 out-of-pocket max, but at least you know if you need a $200,000 surgery that you're going to pay $10,000, not $200,000, right? Free preventive care. Most of these plans offer free preventive care. That can be free yearly physical, free well woman visit, free mammogram, free colonoscopy, the things that people avoid if they don't have health insurance. No one wants a colonoscopy anyway, let alone to like have to pay it out of pocket. The other thing I don't think people think of is you have an agent like myself, an insurance company who's advocating for you. People don't think that the insurance companies are advocating for you, but they have people in billing that are looking over the bills, trying to catch mistakes. Do you know what a mistake is on a medical bill? I probably wouldn't. So that, you know, they're fighting medical fraud, they're fighting billing mistakes. Without major coverage, you don't have a cap. Discounts might apply to certain things, but if you go to have a surgery, do you think the anesthesiologist is going to give you a discount? No. And medical bills also count towards your credit, right? So if you have these bills that you're not able to pay, and are the insurers going to be, or the medical companies and the hospitals, are they going to be too friendly to set up a payment plan if you don't have insurance? Not necessarily. They at least know they're guaranteed a certain amount when you're insured. It's protection for them, right? You're insured. So I'm going to breeze through this stuff because I'm already talking long enough. Peace of mind comes from plans that cover pre-existing conditions, essential benefits. Mental health is huge. A lot of, people don't get mental health coverage. They want it. That could be like regular therapy, things like that. Health insurance is regulated too, right? By the government, clearly. Common medical pathways that people have, these are really just the options in North Carolina. You either have employer coverage, you have the marketplace, or an off-exchange same plan. The same plans that are on the marketplace, if you went to Blue Cross and you said, I want just Blue Cross, it's gonna be the same exact plans, just full price. So there are no private plans. If you went to Blue Cross or you go to United Healthcare, it's the same exact plans if you were shopping on the marketplace, just the same price without having tax credits. So there are no like other health insurance plans, or Medicaid and Medicare for people who are eligible. And that's pretty much it. Alternatives are going to come in the form of short-term medical plans, which only last 4 months at a time currently in North Carolina. A health share. If people have heard of health share, you may have heard of like a medical cost sharing community. You may have heard of a Christian health share. And fixed indemnity plans. Those are insurance plans, but they are not necessarily meant to stand alone. They are meant to be kind of like supplemental coverage. So short-term coverage is meant to be short-term. It might be like you have a few months until you're on Medicare. You might be in between jobs and you want an affordable option and you don't want COBRA. Those are not a good long-term solution, okay? And they also don't meet minimum essentials guidelines, so they're gonna have pre-existing conditions, like they're not gonna cover pre-existing conditions. Same thing with the health share. A lot of them don't cover pre-existing conditions. They can have lots of limitations. That is basically you pay a monthly membership fee. You're not paying a premium, paying a membership fee. And the idea is all the members share the costs. And there are vague contracts with these. All these companies are not created equal. There's not really a contract with a lot of them. You don't have a guarantee that they're going to pay. You're also a cash pay patient. So the health shares are only paying like once something really major happens. Otherwise, you need routine care, you're paying 100% out of pocket. You need to go to urgent care, you're paying out of pocket, right? And then if something really bad happens, you submit it to the cost sharing community. You have to pay the medical bills and you hope to get reimbursed from that medical health share. Hope. Fixed indemnity plans, they pay a fixed cash amount for certain events. Like you might go to the doctor and they reimburse you $50. You might go to a specialist, they reimburse you $100. But if that specialist, visit is $200, you're only getting $100. Those are meant to be supplemental. They're not really meant to be standalone, but we do have some options that are standalone, that could be standalone. Some people are using them as standalone rather than health insurance. It would be absolutely better than nothing. Is it a good alternative to major medical? Not really. It's not going to cover your full bills, and you don't have like an out-of-pocket max and deductible, right? So short-term plans, risky solution. They are meant to just be for a couple of months. And to try and use it as a full year, you have to re-enroll in a different plan every 4 months, and then they are medically underwritten, so if you get sick, you're going to be left without insurance, right? So I don't recommend that. Is it possible? You could maybe get away with it if you're lucky. The health share, I kind of went over that a little bit. They are, some of these are we work with a company called Sedera, and some of them actually offer employer coverage. So you can be an employer and offer a health share to your employees. So that's an option for employers as well. It's not just families and individuals. It is a pretty affordable membership. It really helps people who don't use insurance a whole lot, don't go to the doctor a whole lot, and they're just like, I just want some sort of protection for worst case scenarios. I'm still a little leery of them, but again, when we're in a climate where people are just considering being uninsured entirely, I would say something like an alternative is better than nothing. This is a little bit of information from the Department of Insurance. So there's not really a guarantee with the health shares. You do have to do some legwork with them. People don't really love having to do the legwork of those, and they are not regulated because they are not insurance. Fixed indemnity, these are confusing to people. Usually I send them an option and you can see all the ins and outs of it, and that really helps like when you're looking at the fixed indemnity plans. An indemnity plan is also like an accident plan, a cancer plan. People have heard of those types of plans. They are supplemental. Now we have some that do pay for like day-to-day care. Like I said, they might reimburse you $50 for a doctor's visit. They might reimburse you for chiropractic. They would reimburse you for an emergency room visit, a hospitalization, even a surgery. But they're not going to cover the full cost of care. You will be left with unexpected bills. There's no out-of-pocket max. They might only cover a certain amount of visits a year. Like some of them only cover 4 doctor's visits a year. So it's fine if you're healthy, and that's what a lot of people are utilizing these as, is like, well, it's better than not having insurance and I don't go to the doctor a whole lot. Great. You might feel like you're actually getting something out of this because you're getting that reimbursement. That's kind of an example of one that we have. But again, you need a major organ surgery. Do you have the rest of the bill to pay? Do you have the rest of the cash to pay? So accidents, that's also accident critical illness plans. You can supplement these. A lot of people are adding that on. Employer options, traditional group plans, health reimbursement arrangements. Those are tax advantage reimbursements for employer coverage. So it's basically like they would get the employee would get reimbursed a certain amount for certain things. So that's something they can set up alongside a traditional group plan. ICRA versus a QSERA, that allows the employee to get their own plan through the marketplace or some other ways. Those are flexible options, maybe alternative options. Self-funded, that is outside of my wheelhouse. My coworker can talk to people more about the self-funded options for businesses. You could even offer indemnity plans. Maybe you don't want to offer full major medical, but you can offer dental and vision and things like that as a perk. And then the medical cost sharing community as a team. That's something I talked about. These days, there's not a one-size-fits-all solution for everybody. So to me, you have to decide what you're protecting. Your health, your cash flow, your family, your business. That's important. The deadlines. We're approaching. For the marketplace, the final deadline this year, this is the extension, is through January 15th. Next year, we are not going to have that. It is going to be November 1st through December 15th. But for now, people have through January 15th to make changes to their plan. Those changes would go into effect February 1st. And then you have that plan for the rest of the year. And then you cannot change your plan unless you have a special enrollment period. These are the special enrollment periods. Maybe someone's on Medicaid for a certain amount of time once they come off of Medicaid, turning 26, moving, those are all special enrollment periods. So January 15th is the major deadline. And again, next year there is not going to be the January extension. So next year is going to be really important to be on top of your stuff. Call me. Medicare. Like I said, this was a under 65 heavy. But a lot of people don't understand that there is a Medicare open enrollment period right now. So this is mainly for those folks that are on a Medicare Advantage plan, or maybe they're in an Advantage plan and they want to go back to original Medicare. There is an open enrollment period now. It's January 1st through March 31st, where you can either change, I call it the Medicare oops period. If you didn't pay attention or you don't like your plan, you can change your Advantage plan between now and March 31st. Most people I talk to have no idea this even exists. And I think it's huge because people just think they're stuck in a plan for the rest of the year if they're on an Advantage plan. Now, this does not apply to Medicare supplements, right? But this is important to know for the folks that maybe want to change their Advantage plan. I always stress my help is free. We don't charge any fees. We don't charge consultation fees. I'm paid by the insurance company. If you self-enroll, they just keep the money. It's part of that 20% that they get, right? They don't pay agents if you're self-enrolling. So I have an easy consultation link. People can just book with me and I'm at your disposal. Hummingbird's highly rated. We take pride in that. And that's pretty much it. We're on social. You can find us. So a little bit of peace of mind with health insurance. It's designed to protect you and your family and your businesses.